Hello guys, good afternoon. Welcome to daily market review. I just got my internet restored, so I'm doing this recording right now. I couldn't watch the price action today, unfortunately, but it kind of went according to the plan either way. So yesterday, seeked the buy side, then it turned bullish through the close, attacked the equal highs, and traded into the overnight session, traded into the premium portion of that sell side leg. And today at New York Open, we traded slightly above it again at 9:30. I think this was before 9:30. I'll look at it in a second on the 1 minute time frame. But it attacked buy side, retested the opening range gap, basically like balanced the opening range gap and dumped the whole session, attacked the high probability sell side that was mentioned on Sunday, which was at 19,860. This is Friday's low 2 weeks ago, and also the low of the session. If you guys remember, I've been talking about this level for a while now. I need to turn on this and this. The opening range gap from September 19 Thursday, the CE, this sell side was right above the CE. So I was mentioning that CE, I need to change the name of that. The CE of the opening range gap on the September 19 will likely to act as a draw on liquidity, and I believe we're going to be heading all the way down and closing this gap completely. We're going to be trading to the gap low, and essentially equal lows. The draw on liquidity should be the case for this week or the upcoming week. So let's dive in. Let's see what's going on here. I'm going to change the color to purple because this is an old opening range gap and I don't want to confuse it with the current one. Let's do this one too. By the way, I just noticed that I accidentally gave you guys the wrong level for the opening range gap CE. Let me check it actually. Where is it? So on Sunday I mentioned the gap CE being 813. That as a mistake on my end. It was actually 844. But yeah, I think, hold on 1 second actually. Yeah, 813 is the weekly BC low actually, not the CE, but yeah. Anyways, let's take a look at what happened during the New York session. So we had a huge dump in the morning session. And then a retracement. Sell side was taken down into the September 19 Thursday gap, open range gap CE. So, alright. So before talking about anything, before I start digging into this, so this is the premium portion of that sell side range. So price traded up into the premium portion at 7 o'clock precisely and formed this jagged move here. We have equal lows right here, and then there's also equal lows here, and on the 15-minute I was able to mention this before market opened. Fortunately, the market left equal highs here, which was essentially a SMT divergence with the ES. ES took this high here, and then this is the equal lows, and I said the market will likely to go for equal lows first, and obviously the way I see equal lows or equal highs is if it breaks out, like basically displaces below equal lows or displaces above equal highs, it's gonna be a continuation. But if it just like raids it or sweeps it, that's usually a reversal signature. And in this case, it just basically formed a huge gap, huge displacement, 150 point candle, thus the continuation targeting the sell side. So before also getting into the 1 minute time frame, the reason I was leaning towards equal lows first was mainly due to the fact that price displaced price displaced here. We had double fair value gap, and it was rejecting it, basically IOFEDing into that CIVI. Thus, I was thinking about sell side delivery first. Let me check yes now for a second. I just want to showcase the bearish SMT divergence right here. Yes, swept it. Nasdaq couldn't even get close. Okay, that's a bearish SMT divergence on 4-hour time frame here. 4-hourly. Okay, not 15-minute, but 4-hourly. All right, let's get into the 1 minute time frame, where the fun occurs, fun happens. So equal lows, this low and this low on the 15-minute time frame. And as you guys can see, I'll zoom in a little bit in a second. Let me just change this black color. Alright, as you guys can see here, once price engaged with the equal lows, it formed this displacement and basically ended up being a breakaway gap. The second displacement is a confirmation for a continuation for the whole session. Okay, if it just swept these lows, then I would be like, okay, the price wants to raid equal highs now, but it was not the case. So New York session. So this wick here you see is 9:30 open. What it does is it actually seeks buy side, that high, this high, and trades into where? It trades into premium portion of the last leg. Okay, trades into the premium fair value gap, takes out buy side, and dumps. Here, if you had the bearish confluence, 9:30 candle, second rejection 9:31, and the moment 9:32 candle opened and traded into the opening range gap, low, CE, and high, either or is fine. That is a short, and the reason is rejection, and we had the higher time frame backing up the idea as well. Now we had a small range opening gap, which was just 2 points. So if you were to execute down here, your stop loss would be, I would probably be using this high because it turtle swooped that high. It shouldn't get above it one more time. Or this candle's high. The reason being that candle's high is rejecting basically the 50% of this previous wick, and this wick is the buy side, swing high. And stop loss would be 12 points feasible from CE, 11 points, and from high it's just 10 points basically. Would I have executed this? I do not know. Like, it's easy to talk in hindsight, but if I was live streaming, would I execute? I do not know. At the time of my thought process might have been different. I don't know. But anyway, so it attacked the buy side, traded up into the premium fair value gap. Then the gap basically balanced it here. Offered buy side, offered sell side, balanced price range, and dumped. Formed first percent fair value gap of the New York session. Ended up being a breakaway gap because it was heavy. This is, some people say it's due to the fact that Israel and Iran, but the PA is there anyways before that news happened anyways. So another breakaway gap here, another breakaway gap here, and then price stalled here. And this price action, I think it was the NWALT from 2 weeks ago, last week basically, down here, kind of balanced it out and dropped below. But let's read the order flow in this price action area here, because that was the only entry that was given besides the open range gap retest. So here we have this SIBI price wicked into it. That's a short right there. It's just basically traded into one tick into the SIBI. That's the first thing. The second thing is, if you miss that, which is normal, because sometimes when you look at it like this, you don't see the volume balance. The moment after this candle right there is willing to break away from the up close candles, which means this ends up being an order block. You can also utilize that, and then it displays lower. Now we're trading into 2 weeks ago, last week's N1 and September 19 Thursday's opening range gap high. As you guys can see, it is still a relevant level. Price tested it from below 1, 2, 3 times, just wicked into a SIBI. As another short, in my opinion. Like, maybe not the first one, but the second one, or thereafter, this one right here, because it is turtle souping the wick, which means after this wick, which was also 10 a.m. Red Fuller news candle. After this buy side raid, any candle here, if you take a short, it's high probability, in my opinion. Especially, we had this BC, got inverted. You can use that as an inversion fair value gap as well to go short. And this week's quadrants, if you look at the quadrants, it actually couldn't even reach up to the 25%, which is indicating strength, weakness. And I think that is also, or there should be a bearish SMT divergence, if I'm not mistaken. Let me see. Yep, this was also a bearish SMT divergence, as Nasdaq was basically raiding the buy side. It diverged. Thus, this fair value gap right here, I would use that as a silver bullet basically during 10 o'clock hour. And 10 a.m. open was right here. You would have missed the high of the hourly candle, but still, price can't even reach to the 25% of this news wick, which indicates weakness anyways. So it goes for the minor sell side here. Keeps going lower. Here's a displacement here and here. So initially the first displacement, the lower one, delivers the short-term sell side, and then price basically goes for a turtle soup. It never forms a breaker block here, guys, okay? There's no displacement above this last, though the bearish order block basically. There's no displacement above it. It goes for a turtle soup. I don't think this is SMT divergence, but let's check it out. Yeah, it's not an SMT divergence. It's basically what it's doing is, this is two things, okay? And I love this price action. Why? We have this fair value gap, this SIBI. Price is basically turtle souping within a SIBI. Okay, this makes it a high probability turtle soup. And then it goes for the short-term sell side. Another thing is this high, the very same high, that turtle soup, is, come on, a retest of a higher time frame fair value gap, either 5 or 15 minute. Let's take a look at it. There it is. This one right here. What it does here is it trades into the 5-minute SIBI. Now let's take a look at it on the 15 minute. On the 15 minute, it goes for basically nothing. The 50% of this wick, but that's fine. That's more, I mean, if you look at it that way, that might overcomplicate things. So, but this is a very good signature. Like, once price fails and sweeps the high or the low within a SIBI or a BISI, that is a very, very high probability setup. If you miss the turtle soup, you can fill the second candle right here. Once this fails, you can fill this and put your stop loss about the raid candle. It delivers the sell side. Here it comes very close to the higher time frame objective. goes into the CE of this SIBI. Actually, not that CE, the lower fair value gap. The reason for that is, I would say, it's just a deep retracement. And the same thing, it never forms a breaker block here in this leg, so there's no reason to long that anyways. It's just engineering more liquidity down here, getting so close to the liquidity pool but not rating it. Engineers more liquidity to run on it later on and displaces. Okay, that's the point. If you see this kind of rejection here, do not, I'm telling you, do not short this fair value gap. Do not short this fair value gap. Do not short this fair value gap. Like, do not short any of this PDRAs, because you don't know how deep it's gonna retrace. Thus, you need a confirmation. What is the confirmation here? Let's zoom in. Let's say you're short. You're looking for a short entry in this leg. Instead of putting a limit order within any of these PDRAs, okay, what you need to do is, there is a displacement, okay, here. That's a busy. You wait for at least one inversion fair value gap, or, okay, this is less aggressive way. Once it gets inverted, this candle is a confirmation. The next candle, once it touches that inversion fair value gap, or its CE, this is very algorithmic. It usually goes for CE of inversions. That is your fill, and that is your confirmation. The second thing is, this is more aggressive. You can wait for an order block, a bearish order block. Once it forms, you use that order block and put your stop loss above the OB. You can do either or. It's either or is fine. Like, sometimes when I don't have a higher time frame bias backing me up, I usually wait for the inversion. If I know the draw on liquidity on the higher time frame, usually the daily time frame, is in the direction of my intraday trading plan, which in this case short, I'll take this order block short, okay, which is lower sell essentially. You sell short at the OB retest. Put your stop above the OB. 10 points to make almost 100 points. 10R. Nice trade. So this order flow forms the OB, and there's a displacement also. Went lower, kind of choppy price action here, building up liquidity, equal highs here. Then it runs on the sell side and completes it. Another thing is the last down close candles swing lows. Wicks CE could be also used for pyramid if you have the bias with you, if you know the direction. And then it traded down into the open range gap CE of September 19, Thursday. Here it did damage one more time to the sell side, and then displaced above what? Displaced above this candle's high right there. This now is a break block, and it also means the sentiment in the market has changed. Price algorithmically will seek some buy side, and either after seeking some buy side, it's going to keep going lower from premium, okay, or it's just going to go for buy side and basically consolidate for the rest of the session. So here, unlike the rest of this PA, like compare the down here to this pullback, and those are the only pullbacks anyways. This one never forms a breaker block. This one never forms a breaker block. So any fair value gap formation here or here, BISIs, you shouldn't be taking that. Okay, that will be counter trades, and you'll get hurt. You'll be hurting yourself on trending days by doing so. So don't do it. I've done it before so many times, and what happens is you only miss 300 point, 400 point, 500 point trending days, and you're going against the grain and just basically closing the day 100 points down, and then you have to deal with that drawdown. So here we have this PO3. There's also trap. Displacement. This displacement got retested actually. It just wicked down one tick and rallied afterwards. That's also BPR. And if you long this, the only thing I can say is, the only thing I see as high probability is these equal highs here. very high probability to get tagged, and it does within from entry to there 9.999 minutes to make 57 handles. Massive. And then we have these equal highs. This high is relatively equal to the previous high, so that's the equal high, which is also, we have also this original consolidation area and 10 a.m. candle, which is what? Data, time-based liquidity plus news. So it is likely to, data high, it is likely to get what? It's likely to get manipulated. It's likely to, the price, algorithmically speaking, will likely to clear that high. So here, let's read the bullish order flow, and if essentially afterwards what it does is it goes for that high and turtle soups it, okay, and the rest of the session never goes up there anymore. So when you have a bias, short bias, and the targets are not met, in this case it has not, because the actual draw is September 19 open range gap low, you can actually turtle soup that data high purge with limit order. But anyways, that's not the case right now. Let's read this price action. Price trades down into the BSE, delivers the first equal highs, keeps going higher, retraces down, sweeps the sell side one more time. That's a manipulation essentially. Sweeps the sell side one more time there. In this case, we have this higher time frame bounce price range, or basically higher time frame breaker block. This is probably a 5-minute breaker block, I would say. Where is it? Yeah, here. This one and this one right there. And it sweeps the sell side within that breaker block area and rallies, delivers, clears these equal highs. Jagged move there. Gets into a sell model, inverts the BSE. Now that's an inversion parabolic gap with basically a BPR and order block. This is the OB, that's a reversal. Now in this case, what could happen is the high probability sell model will target this low, wide out low, because it's relatively equal, and then it could also go for the external because the draw on liquidity is lower. But in this case, what happened was minus OB. Let's clear this. Let's clear that. So it rejects the minus OB, bearish OB, inverts the bullish, or basically like changes the state of delivery, and then raids equal lows, clears it, but it displaces, and that displacement was never invalidated. Price mohawked, but it did not invert it, so it kept going, cleared the second high, the most recent sell side, and minor sell side liquidity, minor sell stops, and then it retraced all the way up to the premium portion of the last range essentially, and retested the premium fair value gap. There should be some sort of an SMT divergence there. I'm going to check it out. Yes, I think there is an SMT there. Yep, there we go. Yes, cleared this high, Nasdaq didn't. That's an SMT divergence. Market is giving another short opportunity as ES is turtle swooping high. Oops. And inversion fair value gap there. Kept going lower, cleared the sell side. The minor sell side. Oh, actually, let's do this. And essentially it traded down into the September 19 Thursday's opening range gap CE again, and basically accumulated there, formed a trapped shorts basically, swept the sell side into the CE and displaced immediately. That displacement has two things. One, a BSE. Two, actually three things, I'll mention it. One, BSE. Two, breaker block right here. And sell side sweep within the BSE. And for targets, we have a couple things. So now in this case, the market is back in the buy model because of the breaker block and the displacement. We have this equal highs. Let's clear the chart. Now I'm reading the buy side. We have these equal highs. Then we have this equal high here. And then if it displaces above those highs, we have, where is this? This data high, which should act as a draw on liquidity, as it did not manipulate it. It didn't get manipulated, which is what happened after all. But let's take a look at this order flow as well. So this is the first displacement. Sell side swept within the BC. We had displacement here, came down into the CE of that BC, rallied. The first buy side was cleared, the second one was cleared as well. But the most important thing here is, I'll zoom in, after the second buy side got cleared, we have this displacement here. That is a BC, indicating that equal high was just being used. This one right here is just being used as a fuel to keep going higher. And what's the next target? It's the data high, 10 a.m. high. Okay, so it traded down into the BC and slow grinded up into the data high, turtle soup that, and turned bullish bearish from there on. How do I know that it was a turtle soup? Basically because of the fact that I know the draw will be 635 and essentially equal lows on the 4-hourly 529. That's how I anticipate this being a turtle soup. And if you can't do it, it's fine. You can do it by just looking at the PD arrays. BC got inverted. Now we have an inversion fair value gap, and market is building up sell side. Equal lows and then equal highs. Okay, what happens here is market basically consolidates, and within that consolidation we have, first of all, the jagged move, turtle soup. Then it builds liquidity on both sides of the market. Sell side was built first, then buy side was built. It ran on sell side, equal lows, didn't displace, it just swept. Thus it reversed, and this is a lower time frame buy sub-second to buy model, clears the equal highs. This is a double purge. Okay, sell stops first, then buy stops second, and down. Okay, the real move comes after. So if I go down to let's say the 15 second rather, or 30 second, this is the buy model that you could potentially scalp. I don't like to do it, but for me, what I would do here in this case is I would either fill the inversion fair value gap, and as it builds sell side and buy side, because I have a bearish bias, I would turtle soup this equal high rate after equal lows, because I would be thinking, okay, it's going to be a double purge as the drawn liquidity is lower essentially. So that's what happened during the last hour macro, or last 10-minute macro. Double purge, displacement. Now we have the OB being the turtle soup high. You know what? I didn't mean to delete that, so let's keep that. This is the bearish OB. Minor sell side. Comes all the way up to the CB. After clearing the sell side, rejects it. Bodies are respecting. It's also the open range gap high from September 19, and it goes lower, clears these equal lows, and trades back into basically the range equilibrium of the last push right there, and market closes there. Now here, turtle soup the high, and it's keep going lower. I believe, I'm not sure if it's gonna come during the overnight session, but the drawn liquidity right now for me is this low, September 19 open range gap low, 635, and essentially the real draw is these equal lows. I believe it's gonna get tagged either tomorrow or Thursday, but either way we're getting down there. That's inevitable. Wow, that was a long one. I didn't watch the price action today at all. I couldn't because of my internet provider. It's just like running maintenance, and they ran maintenance for the whole day. I just got it restored, so this was me looking at the price for the first time along with y'all, by just basically doing this market review. So I might have missed a couple things. If I missed anything that you saw, please do share it with me. I like to do brainstorming and stuff and talk to you guys. Other than that, I hope you guys find this insightful. Going into tomorrow, definitely keep today's low. It's a key level. Keep that on the chart. September 19, Thursday's opening range gap CE high and low. Keep that on the chart. That's a key level. All three of them, key level. And the equal lows on the 4-hourly. Keep it on chart as well. So, that being said, guys, I'll talk to you shortly. I will see you tomorrow on the live stream. Enjoy the rest of your day and take care. Have a great day.